Welcome everyone, this is Brian's review of CPA's core and common final examination. Today, we are going to cover the planning stage in Audit Planning Memo. Knowing each stage of Audit Planning Memo is important to tackling audit and assurance exam. Entities must plan the audit carefully so the misstatements are at a minimum. What is Audit Planning Memo? Audit Planning Memo is a vital area of the audit, primarily conducted at the beginning of audit process. To ensure that appropriate attention is devoted to important areas, potential problems are promptly identified, work is completed in a fast manner and properly coordinated. Audit Planning Memo has 4 types: risk, approach, materiality, and procedures. In this lesson, we are just focusing on risk portion of the audit planning. What is risk assessment? Audit risk is the risk the auditor gives the wrong opinion on the financial statements. There are 3 types of risk when it comes to audit planning. First is inherent risk. It's the likelihood that the financial statements are misstated before considering internal control. Control risk is the likelihood that misstatements resulting from the IR will not be prevented or detected and corrected by the client internal controls. And detection risk is the likelihood that the auditors will not detect existing misstatements in the financial statements. So what is risk of material misstatement? Risk of material misstatement is the risk of existence of misstatements in the financial statements prior to audit. Auditors are set to determine the amount of risk to be founded based on inherent risk and control risk. Risk of material misstatement is a combination of inherent risk and control risk. What is inherent risk? Inherent risk exists independent of the audit, is made up of risks before internal controls are considered, such as business risk that prevent an entity from achieving its objectives or executing its strategies. Keep in mind that entities cannot control the level of inherent risk. Also, auditors cannot control the level of inherent risk. What is control risk? Control risk exists independent of the audit. Risk that entities control will not prevent or detect misstatements due to inherent risk. Note that entities can control the level of control risk. However, auditors cannot control the level of control risk. What is detection risk? Detection risk does not exist independent of the audit. Risk that relates to the nature, extent, and timing of the auditor's substantive procedures. Auditors can control the level of detection risk. Keep in mind that it's ideal for entities for low level of detection risk, which an auditor performs. Let's consider a scenario to better understand inherent risk, control risk, and detection risk. We can consider 3 types of risk in case of a hospital operation. Hospitals have risk violating or failing to meet the legal or ethical standards that govern the healthcare industry. These risks may also result in legal liabilities, reputational damages, or regulatory sanctions for the hospital. Keep in mind that this risk is an inherent risk, and neither hospital or auditors have ability to control. So the hospital hired various qualified skilled professionals such as lawyers, internal auditors, consultants. Because the hospital hired these professionals, the control risk went from high to low. These professionals will implement legal and ethical practices within the hospital. The hospital can now set the detection risk at the medium because although hospitals were at risk violating to meet legal or ethical standards, they have hired various professionals to protect hospital from possible suing. For assessing the risk of material misstatement, auditors must determine the level of risk for entities to forecast amount of intensity of audit work. At the overall financial statement level, OFSL, it relates to the financial statements as a whole. For example, managerial competence or fraud, declining economic conditions, fast-changing industry, etc. Material misstatement can also be at the assertion level as it relates to the specific accounts or transactions. Let's consider overall financial statement level and assertion level in detail. Looking at overall financial statement risk level, OFSL. At the OFSL, inherent risk is the risk that in the absence of controls, the financial statement could be materially misstated. These are business risks that prevent an entity from achieving its objectives or executing its strategies. For example, poor financial health, intense market competition, or upcoming purchase of entity, etc. Control risk is the risk that financial statement misstatement will not be prevented or detected by entity's internal control. For example, lack of segregation of duties, poor management, or lack of policies, and etc. When we look at misstatement at the assertion level, inherent risk is related to specific accounts and exists regardless of controls in place. Magnitude of a misstatement takes into account both the qualitative and quantitative aspects of possible misstatement. For example, technology change in the industry, characteristics of an account balance or class of transaction. Control risk affect specific accounts and assertions. For example, lack of authorization, lack of segregation, and etc. Let's now solve a overall financial statement level risk problem. For example, the Ritz-Carlton Hotel in Kyoto had 250 employees. The Ritz in Kyoto has been profitable despite competition in the region. The manager is very involved in the business, and the hotel has an excellent reputation in customer service. Employees of the Ritz feel happy that they are compensated well. The policies and procedures are updated each year. However, none of the accounting department employees hold a CPA designation. This year, the Ritz implemented an integrated computer system to manage general ledger as well as company's point of sales and inventory data. We first have to assess inherent risk at the overall financial statement level. There is a fierce competition in the region, so this increases the inheritance risk, as increased competition leads to higher risk of management manipulating margins. Consistent profits mean that there is a lower risk of management manipulation of margins. Lack of formal training, there is a risk of accounting staff making errors. High involvement with management means less likely to fraud because of their commitment to the business. As a result, the inheritance risk at the overall financial statement level are assessed as moderate. Next, we can consider control risk at the overall financial statement level. Newly implemented integrated computer system to look after general ledger and POS and inventory decreases control risk, as new system is less likely to create errors. Regular update on policies and procedures means decreases in control risk, as risks have developed a firm basis on its policies and procedures. As a result, the control risk is determined to be low in this case. Lastly, to conclude on detection risk, inheritance risk is assessed as moderate and control risk is assessed as low. Audit risk is always set as low. Although inheritance risk is moderate, however, the company is performing relatively well in response to the competition and the fact that the control risk is low. Therefore, auditors can set detection risk at low. Auditors are not very likely to find the existing misstatements in the financial statements. In summary, audit planning is primarily conducted at the beginning of audit process. Risk of material misstatement is the risk of existence of misstatements in the financial statements. Inheritance risk is the likelihood that the financial statements are misstated before considering internal control. Control risk is the likelihood that misstatements resulting from the IR will not be prevented or detected and corrected by the client's internal controls. Detection risk is the likelihood that the auditors will not detect existing misstatements in the financial statements. That's it for the lesson on audit planning memo for the risk portion. I hope this lesson was helpful for your understanding, and now CPA studying has become much easier. And remember to know all 4 parts of audit planning memo to fully understand how auditors perform their work. Thanks for watching, and feel free to ask me if you have any questions. Happy studying and have a great day.